Well, stocks were not alone in looking past Mid-East tensions today. Oil prices actually falling, but the chart master says enjoy it while you can because the market is in for a crude awakening. Carter Worth is over at the Plasma to break down oil's magic number. Hi, Carter.
Hi there, crude awakening. Okay, so chart of oil, and let's divine it together, figure it out. I've got lines here indicating where you have a drone attack on the 16th, of course, and the drone attack on Jan 3rd. But take those out, and that's the importance of charting, right? It's not about the news or the facts. It's about that quite often, to the penny, it gets to the penny on the drone strike and stops, falls to the penny of the bottom of the wedge, and before this current drone strike had already started breaking out. And then, of course, zoom in here, we get the drone attack there. And today we followed through. We hit almost $65 a barrel, meaning independent of whether it's news-related or not, this formation has been resolved to the upside, news or not, and there's every indication that there's more to come. Let's zero in on it. This is the formation. I mean, you can call it a triple bottom. Again, you have a heavy volume thrust to a prior high, and we are toying with the prospects of seeding that high and getting to the former high. Here's another way to draw the lines. You can see this well-defined top at a common level. You can call it a rising wedge, but it's all quite proper as a setup, whether one accepts or doesn't accept the fundamentals, the news. And then This is crude oil on top, and this is relative performance to all commodities. This is the Thomson Reuters equal weight basket of all commodities, from softs, corn and cocoa and soybeans and wheat, to copper and aluminum and steel. And we have just now broken above the relative downtrend line that's been in effect. And you see, of course, zoom here, we've already broken above the absolute line. So finally, if one were to play this in the energy complex, I think the XOP, it's a good ETF. A couple of ways to draw the lines. That is a fairly well-defined triple bottom. And also, of course, the recent action has allowed us to break above the downtrend line that's been in effect the past year, put our triple bottom back in, and every indication of more to come. I think one wants to participate on the long side.
CBW, I'm with you on that. At what point, in your opinion, price-wise for crude, does it affect what Tim just talked about, the strength of the consumer, the economy, those types of things?
Right. A great deal of past recessions have been caused by oil spikes, but it's typically a 75% year-over increase. We would have to get closer to the 85, 90 level to start to have that really be an impact. But listen, here we are, call it 65. You start going to 72, 74, 75. That's not 95, but that's enough to start to put in the bite.
Carter, when you look at some of the big integrated names, they actually haven't done quite as well. And yet I think the fundamentals for a company like ConocoPhillips have really changed with the sector. Is there a reason why you wouldn't go for the best balance sheets in the space, a CVX, a COP? How do those charts look?
Well, it's interesting. So those have been laggards. It's the beta trade, right? People trying to play this if and as there is a further move in crude. I think a barbell approach. So you find some of the most beaten down names, things that are in this space, even a Schlumberger Halliburton, and then go with best in class, like just what you're implying, or Hess is a favorite